Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Thursday, July 17th. In today's episode, Waymo's new achievement. Then, a recap of the latest inflation report and why it's a sign that tariffs might be starting to bite. Markets had a mixed day on Tuesday, with the S&P dropping by 0.4%, while the Nasdaq was able to squeeze out a gain of 0.2%, which was good enough for its 8th record close this year. To no surprise, Nvidia was the big winner yesterday, jumping 4% thanks to the Trump administration easing chip export restrictions to China. We talked more about it on yesterday's episode, so go check that out if you missed it. Here's a wild stat about Nvidia. Their market cap is now nearly $4.2 trillion, which makes them bigger than Apple and Tesla combined. Zooming out a bit, let's talk about inflation, because we got the June CPI report yesterday, and it showed some signs that tariffs might be starting to have an impact on prices. According to this report, inflation in June was up 2.7% year over year. That was in line with expectations, but it's still the highest reading we've had since February. Remember, the Fed has a 2% inflation target, and future inflation reports indicate we're moving away from that right now, not towards it. And that's why investors have pretty much given up any hopes of a July rate cut. According to the Fed Watch tool, markets are pricing in just a 2% chance of a rate cut at the end of this month, and only a 50% chance of a rate cut at September meeting. Just a few weeks ago, markets were expecting a 90% chance of a rate cut at the September meeting. So the odds of a rate cut happening in the next few months is starting to go lower, despite Trump putting daily pressures on Jerome Powell to cut rates. The self-driving company Waymo has hit 100 million fully autonomous miles driven as they expand their services to multiple cities across the country. The Google-owned company has seen their growth go parabolic over the last couple of years. You have to check out this graph showing how many fully autonomous miles Waymo has driven. The chart looks like a hockey stick. Maybe I'm just overhyping the whole thing, but I feel like Waymo's progress still isn't talked about enough. They already operate in 5 cities, San Francisco, LA, Phoenix, Austin, and Atlanta, and they're expanding to more cities like Miami, DC, and New York pretty soon. Let's switch gears and talk about earnings reports, because we had more big banks report earnings this morning. Let's start with Goldman Sachs, because they had a record-breaking quarter, posting the most stock trading revenue in a quarter in Wall Street history. Goldman's equity trading revenue came in at $4.3 billion, which was $600 million more than what analysts were expecting, and $100 million more than last quarter. That $4.3 billion number is more money than any firm has ever made on Wall Street when it comes to trading. It looks like Goldman traders seemed to thrive on market volatility conditions last quarter created by Trump's chaotic approach to tariffs. But it wasn't just their trading desks that had a good quarter. Goldman's investment bankers also showed up, increasing revenues by 26% in Q2 compared to a year ago. That blew past the 10% growth that analysts were expecting. The same cannot be said for Bank of America. They also reported earnings this morning, and they had more of a mixed bag. The bank beat on earnings per share, but they missed on revenue, making it the only major bank to miss sales estimate. That being said, traders still had a strong Q2, so the takeaway here is that when market conditions get volatile, Wall Street banks tend to thrive and make a lot of money in the process. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Shares of the alcohol giant Diageo are up this morning after their CEO Debbie Cruz stepped down, leaving the firm's CFO to take the reins. Diageo owns brands such as Guinness, Johnnie Walker, Captain Morgan, and many more. Sales have been on the decline over at Diageo, with revenues falling 0.6% for the first half of 2025. And last year, its sales were down by 1% for the full year. So investors are hoping that this new CEO will work on boosting the business and cut the company's debt. Shares of Diageo are up nearly 4% this morning on this news. On the flip side, shares of Pop Mart are down this morning after the company behind the viral Labubu toys released their guidance for 2025. The company is projecting a 200% jump in revenue and a 350% jump in profits, which is a sign of incredible growth. But some analysts think that the Labubu hype may have already peaked. As a result, shares of Pop Mart shares are down 5% this morning. Finally, shares of ASML are down this morning after the company said that it couldn't confirm its 2026 growth expectations due to tariff uncertainty. ASML is a pretty important company in the AI supply chain. They make advanced machinery required to make the semiconductor chips. Their machines are used by AI foundries like TSMC to help produce chips for NVIDIA and other clients. As a result, shares of ASML are down more than 8% this morning at the time of this recording. That's all for today's show. Keep navigating those waters and see you tomorrow.